Hello and welcome to today's webinar WIEF straight up entitled US and China, Navigating Market Uncertainties. Now, without further ado, let's welcome Dr. Juwita Mohammed. Dr. Juwita Mohammed is a fellow in the Economics, Trade and Regional Integration Division of ICES Malaysia. She has worked at the Asia Desk, OECD in Paris, the Asian Development Bank Institute, and Waseda University in Tokyo, Japan. She is currently an Indo-Pacific Fellow at the Perth US-Asia Center of the University of Western Australia and a member of the All-Party Parliamentary Group Malaysia. Without further ado, over to you, Dr. Juwita.
Thank you so much for that very kind introduction. Welcome, ladies and gentlemen, Excellency, distinguished guests. Welcome to our webinar session titled US and China, Navigating Market Uncertainties, which has been a topic of interest the world over since before the onset of the pandemic. And this is a very interesting topic because the tension between these two major powers encompasses both economic and also political factors. Ladies and gentlemen, looking from this region, where the majority of the countries are made up of relatively small open economies, countries in this region trade heavily with China. And amid the backdrop of the pandemic, in 2020, total trade between China and ASEAN increased by more than 4% compared to the same period the year before. In terms of investments, FDI outflows from China into ASEAN also grew by 53% in 2020, with further cooperation in new areas such as intellectual property and e-commerce between China and ASEAN. Regional and global value chains in the region can be repaired and bolstered, and the Asia-Pacific may again emerge as the engine of growth for the region and the world. But again, the success of these arrangements will rely heavily on a sound international trade ecosystem, which would greatly be influenced by the US-China relations. Here to delve deeper into the topic, I will call upon our first speaker, Dr. Shirley Yu, who is the director of Shirley Yu & Co. She is a senior visiting fellow with the Institute of Global Affairs and the Feroz Lalji Center for Africa at LSE, an Asia fellow with the Ash Center of Harvard Kennedy School, and also a professor with the IE Business School. She will be talking about the very strategic initiatives between 2020 and 2035 and the implications to the world and US-China relationships. So Dr. Shirley, the floor is yours.
Thank you so much, Juwita. Good day, everyone. Good morning or good evening. I'd like to, first of all, talk about China's long-term visions between 2020 and 2035. And upon that, I'd like to echo what Dr. Juwita has just mentioned, that this particularly aspiring China and ASEAN economic integration. So first of all, let me bring you back to China's long-term vision. So at the 14th five-year plan periods early in March, when it was announced, China simultaneously announced a 15-year long vision that essentially planned China's development roadmap all the way till 2035. And so firstly, let me give you a picture of where China stands economically today. China in 2020 has surpassed that of the EU 27 economies combined. And so this really represents a tipping moment, I think, for the world, and perhaps an irreversible tipping moment, because China's economy, as we saw in Q1 of 2021, it's grown 18% on a year-over-year basis. And so it'll continue to perhaps drive the gap further upwards from the EU 27 economies. In the 15 years long vision, China has planned for the economy to double again between 2020 and 2035. And bear in mind, the Chinese economy has just doubled between 2010 and 2020. So over the next 15 years, in order for the Chinese economy to double again, that implies an annual average growth rate for about 4.7%. Well, a lot of people would say, well, if China starts to grow below 6% under normal circumstances, it is a skyfall. China's economy is slowing down and there will be fear everywhere. But we have to think about the size of the Chinese economy today, and growing 4.7% on top of that large scale is quite an extraordinary figure, and consistently compounding over the next 15 years. And just to bring you to the China-US parallel, by the end of the 2020 period, China on a nominal GDP basis has hit roughly about 80% of the nominal GDP of the United States. Well, this is the first time a rising economy has come this close to the US economic might. The last time when an economy that came very close to the United States was Japan, when it hit 73% of the US economy back in 1993, and Japan had never made it beyond that. And the former Soviet Union stopped at about 65% of the US's nominal GDP in that period. And so China really has come closer than any competing economic power has ever done since the Second World War. And so given now the current economic trajectory, and of course with all the geopolitical complexities and also various supply chain disruptions, particularly in the tech space, there are too much uncertainty at the moment to give a very precise trajectory for such a long term. But if, let's say, everything stays under normal growth pattern, China is looking on track to come to economic parity on nominal GDP basis with the United States at some time between 2030 to 2035. And of course, some analysts have placed that parity time to as early as 2028. And once again, because of all the uncertainties, this is highly unpredictable. And so China has increasingly become the center of economic growth. And along with China, this entire ASEAN and the Eurasian region will continue to drive the next wave of global economic growth. So now let me talk about a few grand strategies that China has established for the coming 15 years. The first one is nothing new to many people now. It's Made in China 2025. This was announced back in 2018. Essentially, it aims at driving the Chinese manufacturing towards the very top end of the global supply chain. So particularly in the high-end manufacturing space, we're starting to really see some outcomes that are driven by this Made in China 2025 strategy. And I'll mention two prominent sectors. One is the smartphone sector. So Chinese mobile phone brands from Xiaomi to Vivo to Oppo to Huawei, etc., they are currently producing over 50% of the global smartphone market share. And so when the country gets to over 50% of the entire global output, that absolutely gives the dominant say and the pricing power. And so China is in the smartphone devices market, China is absolutely there. But a few years ago, China wasn't there. So this is really the outcome of a deliberate policy to drive towards a high end in the smart manufacturing. And the second sector that it's achieved a phenomenal result is the new electric vehicle sector. So in the NEV space, a few years ago, again, it was virtually none in China. And then all of a sudden, all the tech players, and if you think about the new electric vehicles market, it wasn't really led by a lot of the traditional automobile manufacturers. It was a lot of the tech companies like Alibaba, Tencent, and Meituan, all the China's big techs. They invested or they just went into the market themselves and started building NEVs. And so in the past 3 years, a lot of the Chinese NEV players have gotten listed in the US stock exchanges. They've become quite a plausible competitor to Tesla. And we just heard a couple months ago, Xiaomi and Huawei have both entered the NEV market. And now you might wonder, why do these smartphone companies enter the NEV market? It's not even close to their space. But this is the rationale, because today in China, as China enters into this ubiquity of connectivity world, the car, the new electric vehicle, is nothing more than a large scale mobile phone. So really, if you just build the roofs and the wheels, etc., those are very easy because China has the ready manufacturing capacity, but that doesn't make the new electric vehicles market. What really makes it and gives it the advantage is the autonomous driving technologies, is the Internet of Things technologies, is the cloud computing and the AI capabilities, and all of those, whatever Xiaomi and Huawei are enabling in a cell phone, essentially they can enable the smart car manufacturing. So as a result, if you look at the US market, well, Tesla is amazing, but there is no other NEV players in the United States. But in China, on the contrary, there at one point in time, there were hundreds of NEV players, and they really fought each other out. And as a result, we're starting to see some of the bigger players that are starting to rise, but it's a fiercely competitive market. And as a result of that fierce competition, the technology improves very quickly, and the market becomes mature much faster as well. So this is really the difference in the dynamics in the tech space between China and the United States today. And so China is really rivaling up at the top end of the global supply chain. So as we just mentioned, the smartphones and the NEVs, each accounts for about 50% of the global market share today. Quite the phenomenal growth. And the next strategy is AI Vision 2030. This is deliberately China's ambition to build a digital infrastructure within the country, from the 5G base stations to big data storage to cloud computing to AI capabilities, et cetera, et cetera. And so with all these digital infrastructures put in place now, on top of it, with the fast speed of data generation, AI applications starts to develop very, very quickly. And China's goal is to rival the United States in AI by 2030. And China obviously wants to vie for the AI leadership position in the next decade, within the 10 years time. So China's digital infrastructure post the COVID-19, as a typical example, received somewhere around $5 trillion of infrastructure spending package. So post the COVID-19, China didn't do like what the US did by using fiscal stimulus and sending checks to every citizen in the country. China used the stimulus to invest in digital infrastructure, as mentioned, from big data to 5G, et cetera, et cetera. And so these type of investments in infrastructure are actually the best type of investments for the future. And I think that this was quite a stark difference between the economic rescue plans between China and the United States post the COVID-19. And as you see now, the Biden administration had started to call for infrastructure stimulus as well. The Biden administration has been calling for this $2.3 trillion of U.S. Infrastructure stimulus package, but within it, only $600 million is dedicated to chip manufacturing, essentially in the digital space, but that's far from enough. And as I just mentioned, the post-COVID-19, China has pumped circa $5 trillion or so over the next 5 years, because they are going to be phased in over time. So big investment in the digital space, and that's going to propel the infrastructure, and on top of it, obviously the applications formation. And so we're really starting to see the digital space, infrastructure spending starts to make a big difference. And the US, in my opinion, the infrastructure needs improvement, both the physical and the digital. But now in this age of US-China competition, the frontier is going to be in technology. And so the US really needs to put more focus on digital infrastructure expansion there. Now, the next vision that China has is China Standards 2035. And so this was launched sometime last year. And China is essentially vying for building the soft element of global governance via rules and the standards. And China wants to build the global 5G standards. And to be fair, China, and especially Huawei as the leading telecom infrastructure builder, Huawei does possess the highest amount of patents in the 5G families across the world. And so China does have some sort of a power in establishing or helping to establish this global 5G standards. And China is vying for building essentially standards for all frontier technologies for the 21st century, from AIs to IoTs to quantum computing to space technology to biotechnology, et cetera, et cetera. So these standard building is something that China is ambitiously pursuing over the next 15 years. Now, I'd like to talk about the China and ASEAN economic integration. It was mentioned earlier that ASEAN has overtaken the EU to become China's largest trading partner in 2019, and it continues, the China-ASEAN trade continues to grow, but it's not just in the trade space. China's FDI has been steadily rising as well, and in 2020, post the COVID-19, contrary to a lot of the common sense beliefs that supply chains are moving out of China, China in 2020 actually became the largest foreign direct investment destination in the world. China surpassed the United States in achieving this position. And in 2021, China's FDI continues to rise. But what's interesting is, in terms of the growth rate of foreign direct investment coming into China, the Belt and Road region and the ASEAN region has become the highest growth of foreign investors in China in 2021. And so things are fundamentally changing. And I think more capital eventually will be coming from the broader Asian region to invest in China. And relatively speaking, that'll surpass the direct investments from the EU and the United States in terms of the growth rate. And now there is a huge supply chain recalibration that are going to happen within China and the ASEAN region, because as China starts to hit $11,000 per capita GDP, China has become a very expensive country for a lot of the low-end manufacturing. So China used to thrive as the world's factory, from making matches to toys to mirrors, you name it, and all the way to what we just talked about, spacecrafts to NEVs, etc. So China is no longer low cost, and China, to be fair, no longer has the labor premium, because China is feeding into an aging society, and the labor's absolute number is actually declining at a very quite a noticeable speed, perhaps beyond the expectations of the policy planning community. And so today, less labor force within the Chinese manufacturing space, and the higher per capita wage cost. And so a lot of the mid to low end manufacturing capacity will be moving to ASEAN, and I think increasingly to Africa. And so this China-ASEAN integration is happening, and altogether, the rise of this whole Asian region is going to become undoubtedly the growth center of the world. And next, it's what's really significant is the signing of the RCEP agreement. And I think ASEAN, to give ASEAN credit, it's really played a pivotal role, because between China Japan, and South Korea. These three countries have been trying to culminate a free trade agreement for a long time, and it's never come to fruition. And now, because of ASEAN's initiative, all of a sudden, China, Japan, and South Korea has a free trade agreement. So this is actually really amazing. And so one policy thinker said, and I echo his sentiment, he said, ASEAN's power does not come from its strength. It actually comes from its weakness, because a lot of people underestimated ASEAN. They don't see ASEAN as a threat. ASEAN is a young, burgeoning economy, populous and hardworking, and it has a lot of the demographic advantages, but people don't really see ASEAN sort of as a big economic entity where it generates challenges to the rest. And so ASEAN actually manages to use its benign position to manage to bring all these very complex players within the broader Asian region together, and including today Australia and the New Zealand, because if you look at China and Australian trade relationship, it's freezing. But with the RCEP agreement and ASEAN's efforts, all these countries have come together. And today, to talk about it in quantitative terms, ASEAN's economy aggregate is already as big as Japan. And so I think ASEAN should never be underestimated again. Now, in China, the other major area that's going to happen, where liberalization is going to happen, is going to be its financial market liberalization. Well, now China's Hong Kong and the Shanghai Stock Exchanges are ranked global number 3 and number 4. And so we're talking about amongst the top global stock exchanges, China actually has 2 of them. And so number 1, number 2 are New York and London. And so very soon, we are starting to see already global capital rushing to China post the COVID-19. They went into the stocks, the stock market, and also they went into Chinese bond market. And so foreign capital now, it's welcome in China. More and more foreign capital are going to come into China, invest in the secondary market, in the wealth management market. And so China's financial platform is going to be broadened and deepened. But also China is mindful that when a lot of these money came into China cross-border in 2020, China has seen this asset pricing inflation, and as a result, we saw the RMB appreciation, and then you have all these inflationary pressure. And so to have all these capital coming into a country is actually not necessarily a good thing, because China has a closed capital account. So once they come in, they have to figure out how to get out. So it's not a free two-way flow. And so with that, it really starts to build a lot of the pricing pressure within the Chinese financial system. And that really means systemic risks. And so the Chinese policymaker has made a very, very tough decision that over the next 5 years, China is looking at opening up the capital account. And of course, gradually and to a large extent, it will try to have it as open as possible. And so, but that's a big call, because China has always protected its capital accounts free flow. And so over the next 5 years, when the capital account fully opens up, not only the global capital are going to be attracted to China because of that free flow, but also it'll push Chinese RMB to become a bigger currency in global trade, investment, and reserve currency status. And the next big vision is China's carbon neutral plan 2060. So last September, China has announced that it's going to reach carbon peak by 2030 and carbon neutrality by 2060. So now China has earmarked something like $26 trillion to invest in clean energy infrastructure and the clean energy technology. And by the third quarter this year, China is going to establish a carbon exchange. Well, now because China is the world's largest carbon emitter, so naturally China's carbon exchange will become one day the largest in the world. And what that means is that the future global carbon trading will come to China. and China will become the center of global carbon trade, including derivatives and futures on carbon, etc. And so think about that. And so China not only becomes this global carbon trading center with all the financial power, but at the same time, all these trading are going to be denominated in the RMB. And so that really gives a lot of status and the future potential for the RMB's global stature as well. So in general, take technology, financial opening, digital infrastructure, and the carbon neutrality. These would be the 4 fundamental drivers of China in the next 15 years to deliver this modern economy, essentially to 2035 and leading to 2049 upon the centenary of the Chinese and the founding of the People's Republic for China to achieve what President Xi called Chinese national rejuvenation. I'll stop here.
Thank you, Dr. Shirley, for that excellent explanation of what is China planning for its future for the next 20, 30 years ahead in time. That is excellent information there. Thank you so much for sharing. My next speaker is Mr. Richard Javad Haydarian. He is an Asia-based academic and policy advisor. He is currently a professorial chairholder in geopolitics at the Polytechnic University of the Philippines. He was a visiting fellow at Taiwan's National Chengchi University and an assistant professor in political science at the La Salle University, Philippines. So he will be analyzing the topic from a macro geopolitical perspective on the US-China new Cold War, zooming into the post-pandemic economic recovery and the economic world order as a whole. Richard, the floor is yours.
Yes, thank you very much, Gita, for the kind introduction. And thank you very much also to Shirley for giving that kind of upbeat overview of the centrality and growing centrality of China in the post-pandemic global economic order. It's, I think, around 6 a.m. my time. So I'm based now in Dubai time. So that was a good wake-up kind of also opportunity for me. Let me apologize just in case if my audio is not perfect. I'm using VPN because based here in the Middle East. And also, well, I can say that probably I've written like 2,000 articles. A lot of them are available online. So just in case I didn't have enough time to cover a lot, you can just look at the details. And my priority here is to set the tone for the discussion. I mean, Shirley has already covered so much. I'll try to slow down first, not speak too fast, and at the same time, compress my discussion so that we have more time for the question and answer. I can see a lot of interest generated in the chat room, especially that great opening by Shirley. I mean, she makes this very much an exciting topic. They usually say that economics is the kind of a dreary science, but I think in this case, Shirley made it the more upbeat one. So unfortunately, I'll be the one talking about the less upbeat part of what we could look at in the coming years as we enter a kind of a new normal, hopefully, if we can move towards a new normal. Now, the great American writer Mark Twain said that history doesn't repeat, but it rhymes. I mean, listening to Shirley a while ago, she provided us a number of historical parallels. For instance, the challenges posed by Japan and Soviet Union in the past, and how China is an unprecedented kind of challenge to the United States. In fact, my argument in the past year has been that the real Cold War is really between China and US, because the Soviet Union was never really in a position to challenge the United States. Economically, the Soviet Union was very isolated. Economically, it was never as dynamic. So if you want to talk about a new Cold War, in fact, a Cold War, whereby there's indeed a degree of parity, but at the same time, rationality for the two powers not to go to direct conflict, I think this is the one. This is the real one we're seeing. And I think the Soviet Union challenge was just a dress rehearsal. Now, putting that aside, I think history is also important because if you are to read the works of John Maynard Keynes, among my favorite economists, you know, he was just few years before the First World War. If you're a normal person sitting in London, most likely much of your wardrobe will come from around the world. he was talking about a very harmonious globalized world. And in fact, during that time in the early 20th century, Germany was seen as the inevitable superpower. By every single indicator, Germany was taking over all of its major neighbors, right? At least in Europe, right? And there was tremendous amount of economic interdependence between Britain and Germany, not to mention the fact that the Tsar of Russia, the Kaiser of Germany, and the King of King Edward of Britain were cousins. And yet the First World War happened. Now, this is not to say we're heading towards a world war. This is to say that you cannot separate economic interdependence from geopolitical tension. And that unfortunately, sometimes the more we are connected economically, the more there are friction, the more there are tensions and potential for reversal. In short, history is not linear and it doesn't move in a single direction. Although, of course, by every indicator, it seems China is going to be the dominant economic player of the 21st century. And in fact, currently I'm working on a book called China's New Empire, and I'm precisely talking about the economic influence of China. Now, looking at the pandemic, I think we can looking at the pandemic, we're effectively at a crossroads. This is the argument I'm making. And the crossroads, if you look at the structural trends, we are kind of moving towards a negative direction. But at the same time, if you look at statesmanship and agency exercised by important leaders, I think we can move in a positive direction. And that's where I'll slightly talk about the WIEF Forum, where President Xi Jinping was very much the centerpiece speech. And I kind of disagree with the media coverage, which kind of saw the speech as a warning to the US. I think the WIEF Forum actually gives us a preview of how we can avoid a negative trend in the post-pandemic era. So very quickly, I'll go through this. I mean, historically, if you look at institutional economics among others, you could see that when you have major shocks like the COVID-19 pandemic, I mean, this is really a shock. I mean, most of us, some of us, I remember back in the normal days in 2019, sometimes I'll be in 3 continents within a week. If someone told me in 2019, up until December 2019, that we'll enter a world whereby travel becomes impossible, that all of us have to use masks every day, and that governments will spend trillions of dollars in financial assistance, I would say that's the stuff of Hollywood. And it happened, right? And we can be in this situation for quite some time, right? So extraordinary things happen, and this COVID-19 is a major shock in many ways. And in the past century, we saw how, for instance, the Spanish influenza and the Great Depression also created major geopolitical changes in societies, right? Including the fact that it led to the rise of the United States as a major superpower. Now, biologists talk about the concept of genetic drift. So when there's a shock from outside, if there's a disease or long-term changes in the environment, human beings or animals can develop genetic drift. Now, in economics and political science, you can also have what you call institutional drift. So what shocks like the pandemic can do is to reinforce long-term structural trends, but at the same time also create major changes in the trajectory of those trends. And that's what I'm going to talk about very quickly. Now, in terms of negative structural trends, we're in Asia somehow, and generally Asia is seen as the more or less the success case if you compare it to North America, Latin America, and Europe. But the reality is that the pandemic could also create a very unequal, socially unstable, and geopolitically contested Asia, right? We're increasingly moving towards what I call a 3-speed Asia. So on one hand, countries like Taiwan, Vietnam, and China have done very well in terms of dealing with the pandemic, at least by the data that we're given. So they're in a very, very good position, right? At the same time, you have other countries like Thailand, South Korea, or even Japan in a middling position. And then other countries like Indonesia, India, and the Philippines not doing very well. So we're moving towards a much more, not bifurcated, but trifurcated kind of Asia, a 3-speed Asia, which is quite different from the kind of story of upbeat Asian dynamism or Asian century that we use. And generally, with those kind of fault lines can come more and more tensions. Now, Shirley very correctly emphasized how important China will be in every single indicator, especially in cutting edge technology. I mean, the fact that the last week, just Japan and United States had to come up with their own counter 5G AI initiative to China shows how much of a formidable strength China has in this area. In fact, the book by Kai-Fu Lee, The AI Superpowers, was really a wake-up call, as well as works by people like Harari, who emphasize how the digital and AI technology can actually benefit the more authoritarian systems than the more open system, which is almost the opposite of what happened in the 20th century. So in the 20th century, the spontaneous open systems won because they were better in organizing economic life. So Soviet Union central planning versus capitalist system. But the nature of AI and cutting edge technologies today is such that whoever can accumulate the greatest data and centralize it actually has an edge, right? So in that sense, the 21st century may see a reversal of the economic theories or the big debates of the 20th century. And in many ways, if you look at China, I think Kai-Fu Lee was talking about like 7 dimensions of AI competition. China is already dominant in 3 of them, including in facial recognition, among others. I remember like the first times I went to Beijing in the past decade or so, I was amazed at how no one was using currencies. Like foreigners like us were like fools. We bring out money, but even the older folks in China were using barcodes, right? So in many ways, China is really way ahead of everyone, right? In terms of the technology, but it's precisely China's strides in cutting edge technology, not only in terms of low-end manufacturing, that I think has created a lot of anxiety in the West. I think if you look at even anti-Asian sentiments in the United States and Europe, among others, it has to do something with the fact that China is now a formidable threat. And I think what happened in the Alaska summit or meeting the other month is really troubling, because for 4 years, we thought that the new Cold War between US and China was because we had a fool in the White House. I think a lot of us can agree that Trump was not really your statesman, right? Your ideal statesman. In many ways, he contributed to that tension. In many ways, he triggered the tension. So when the Biden administration came in, I think there was an expectation that we'll have a more mature statesmanship that will prevent a Cold War. And yet look at what happened in the Alaska summit. Effectively, it was deadlocked. There was no agreement on a joint statement, and each side was taking a tough stance. A wolf warrior diplomats on one hand, China bashers on the other hand. I think that was really troubling. And this is where, the concept of Thucydides trap comes in the picture. So political scientists like Graham Allison, for instance, said that if you want to understand how US and China are going to interact in the 21st century, look at what happened in the Peloponnesian War, whereby an insecure, dominant Sparta faced an increasingly confident rising Athens. And that situation created the psychological and structural conditions for direct confrontation. So ironically, the very positive things that Shirley emphasized with respect to China is also creating anxiety, stress, and tensions that could undermine this very positive trend that we'll see in the global economy. And that's where I think geopolitics is extremely important. At the same time, I think China is also now, of course, flushed with money and resources and all, and that gives it even more confidence to assert itself in the region. And, coming from Southeast Asia, I mean, let's not kid ourselves. It's not like China has smooth sailing in terms of its diplomacy with neighboring countries. We see disputes in the South China Sea not improving, but intensifying. We see border disputes between India and China. We see even China and Japan getting at it in the East China Sea. So this is a situation whereby China is becoming more economically dominant, but at the same time, geopolitically, ironically, it's a little bit more isolated than in the past. And I think the coordinated sanctions that we saw from European Union, US, among others, on the Xinjiang issue, for instance, that also show that as dominant as China is becoming economically, diplomatically, it's losing some space, right? And we can also see that in growing support for Taiwan, for instance, in light of its tensions with China. So you get the point. I don't have to go to the exact details. You can just read my books and works. My fundamental argument is that structurally, that growing economic dominance of China can also bring about growing tensions and potential conflict with the West. So in a way, it's also the reverse of what Shirley was saying about ASEAN, that the strength of ASEAN is our weakness. In the case of China, its very economic strength can become its geopolitical weakness. So I think this is the mirror situation we're seeing right now. Now, that's the structural issue. Nothing is predetermined in global politics. That's everything that history and modernity shows us. Which brings me to the Boal Forum. Because what I noticed in the Boa Forum is the three P's. The first P is a preview. I mean, first of all, it's fascinating that you have 2,000 of the most important people gathering in person, right? In China, including the heads of Apple, including the heads of Tesla. I mean, that in itself kind of makes you jealous about the situation in China, but also makes it a little bit optimistic. Maybe we can return to a semblance of normality, that's very much possible, including the fact that, China was the first country hit by the pandemic, and look at how far they have come. But it's also a preview of how central China is going to be to global economy. I think for a long time, everyone was looking at Davos and the World Economic Forum. I think now we'll pay more attention to the Boa Forum and what Xi Jinping will say. Because again, as Shirley pointed out, China will be very much central to global economic recovery. I think some data show that China alone is responsible for more than 30% of the new GDP contribution to the world, right? In fact, that has been the case since 2008, right? And that contribution of China to global economic recovery will be even more dominant in the coming years. But the second thing is, it was also preventative. It is true that President Xi Jinping made some veiled jabs at the Biden administration, Biden moving towards a quadrilateral security dialogue consolidation, networking with allies, with Japan, with NATO to put pressure on China. True. But at the same time, I think President Xi Jinping was also signaling to the United States that whatever structural tensions we're having today, right? We don't have to go back to the days of Trump, or don't have to go back to the not so good old days of Cold War between Soviet Union and China. So I think if you really read between the lines, and sometimes in fact in the lines of President Xi Jinping's speech, he himself doesn't want that conflict. And he's signaling to the United States that this is not in the interest of both sides. And this brings me to my last point, which is partnership. Now, one of the interesting things in the Boa Forum that I noticed is, of course, as I mentioned, you have major representatives from American business sector. The big tech titans were there. Now, this is very important because if you look at China's Belt and Road Initiative, it has come under immense criticism, including there in Malaysia. I talked to Prime Minister Mahathir when he was still there. Very much the issue of debt trap was a big issue. But the BRI, as in China, is not monolithic. There's no given BRI. China is a flexible, non-monolithic, very dynamic power that learns from mistakes and moves on. I think what we can increasingly see in the post-pandemic era is a BRI that is not just dictated by the Chinese Communist Party, not a BRI that is just funded by taxpayer or money of the Chinese people or the Chinese fiscal resources, but a BRI that is increasingly fiscally sustainable, increasingly environmentally sustainable and friendly, but also has more participation from the business sector. So I think that Xi Jinping was not just trying to signal to President Biden that we can work together. He's also signaling to the American business sector, to the big titans, Tesla, Apple, among others, that we can work together. And eventually we can have a kind of a more inclusive BRI that focuses on digital trade, that focuses on high-end investments, and is in accordance to prevailing good governance and environmental sustainability standards. And just to end the note, the reality here is that, yes, US and China are the big powers, but they're not the totality of the world. But at the same time, there's no way that we can get out of our current morass if there's no G2 cooperation between those two superpowers. On every single front, from dealing with the vaccine issues and mutation of the pandemic, to dealing with the climate change and bringing down carbon emission, to economic recovery from the pandemic shock, the US and China will have to work together, whether they like it or not. And that's essentially what you can see in both the statements of the Biden administration and the Xi Jinping administration. And that's where I think there's still a cause for optimism, despite some of the troubling structural trends and also troubling historical precedents whereby 100 years ago, everyone thought everything is going dandy in London and UK and much of Europe, and yet First World War happened. But we can learn from history and make sure that it doesn't not only not repeat, but also it does not rhyme in that sense. So I'll end it there and looking forward to the question and answer. Thank you very much.
Thank you so much, Richard, for that excellent elaboration. Let me go straight to the questions. The first question is on the strategy of the US to sustain economic competition particularly on technology, AI, and innovation. So what should be the strategy for the US in terms of sustaining its economic competition, especially on technology, AI, and also innovation? Can Richard or Dr. Shirley answer the question?
I'll just jump in here with 2 points. One is I just mentioned with the infrastructure stimulus. I think infrastructure stimulus, that was an FDR's way to get out of the last wave of demand, aggregate demand shock. And so that works. Keynesianism works. So the US needs to pump money into infrastructure, but the US should go all digital. I was just told in New York, just to build a one station extension of the New York subway, it costs $2 billion. The cost of labor is so high in the United States, it doesn't make sense. For $2.3 trillion, how long of a subway are we going to build? It's not impactful today. The US should focus on digital infrastructure. And don't forget, the world, just like Kuznets said, the understanding of rich countries and poor countries only happened over the past 2 millennia at the onset of the Industrial Revolution. It is technology that are fundamentally propelling this vertical sharp rise of the global industrial output, and everybody must focus on the frontier technologies, and that's where the US should put its to bank its money in. And the other thing is, I really, really want to mention, and Richard has mentioned it as well, about the data governance. And this is the biggest issue, I think, on the global horizon, because the world's data are essentially controlled by 6 companies, 4 from Silicon Valley and 2 in China. How do you govern these digital sovereigns? National sovereigns can no longer govern them because there is a mismatch. So now the data governance in China, I should say that China is driving for massive amassing of data. By 2030, China's leading economist, Zhu Min, former deputy central bank governor, said by 2030, China is going to have twice the amount of data as that of the OECD countries combined, twice of that amount. Imagine what that's going to do to Chinese data, AI applications. And so the US, I understand, it's important, and also the EU, it's important to protect that personal privacy. But if you go to the far extreme and you don't share any data at all, you might as well just don't grow any AI. And so there has to be an economic balance between personal privacy and economic growth, particularly digital growth.
Richard, add on?
Yeah, fascinating. Yeah, thank you very much, Shirley, for also pointing out, the data governance is going to be a big thing, especially with the advent of 5G communications and quantum technology, right? Because that may also allow sovereign governments like China to exercise a degree of control over information flow in ways that was not the case for quite the past, century or so. So we're going to have a big debate also on data governance. And I think and data is very important because data is big money, right? As we can see in the case of Facebook and all big titans, they're essentially monetizing our data, right? And making trillions of dollars out of that. So that's going to be a really big issue and big source of contention, I think, in the coming years or so. Now, speaking about the issue of U.S. industrial and strategy, I mean, the fact of the matter is that the good thing with tech competition is that it can be actually more positive sum than many people mention. I mean, I would love to see more 5G and 6G, whatever competition. I mean, the problem is that the United States really abandoned a serious industrial policy during the Clinton administration, and they paid the price for that. I remember, I mean, most of you are younger than me, but I remember in my younger days, having a Motorola, right, was like the sexiest thing, right? I mean, if you had the Motorola Razr, it was a great thing. Now, I mean, I think no one knows about Motorola anymore. I mean, there are many American or Western companies that completely went under the bridge because there was no clear industrial policy in that part of the United States. That is why, de facto, China, with a clear industrial policy, has ended up dominating the 5G, network technology. Now, that doesn't mean that that's the end of the world. It just has to put more pressure on the United States and Japan and others to also work on their own. So the recent, for instance, initiative by Japan and the United States, the $5.5 billion initiative to invest in 5G, is not necessarily a negative thing if it creates more positive sum competition, because for us consumers, we want to have good technology, right? And we don't want to just rely on Huawei or one side. In fact, I heard a fascinating interview between the economist and the CEO of Huawei in his, I think, Greek marble palace and all, whereby he said that he's even willing to open up about his 5G technology and open up to cooperation with much of the world. So I think there's much that we can achieve from that. And that brings me to the second issue, because prior to the Alaska summit, from what I understand, the Chinese side put forward a series of concrete proposals. Some of these proposals was that they wanted the Biden administration to remove or at least end the blacklisting of some of the tech champions and big companies of China, not only Huawei and ZTE. We see also Xiaomi, for instance, now recently blacklisted. We saw the Trump administration going after WeChat, TikTok, among others. The Chinese want that to stop, including also sanctions on a number of Chinese companies with respect to the South China Sea disputes, among others. In exchange, I think what I understand, I'm sure you can also add on this, is that China has also shown a degree of openness or flexibility to perhaps make tweaks to its 2025 industrial strategy in ways that will reassure the West that this is not going to be a predatory industrial strategy. Because the fear of much of the West is that this is not a fair competition, that technological and corporate theft and hacking, among others, is one of the things that gives China an edge, not to mention implicit subsidies and other kinds of violations of existing rules under WTO, among others. Again, the Chinese side will deny that, among others, but this is the essentially the position of Japan, US, and Europe, that we're not having a fair competition here, right? You have state-backed industries, right? And then you're using corporate espionage, among others. So I think there could be certain tweaks and really detailed technical negotiations on the language and direction of China's 2025 industrial policies in ways that will create more reassurance. So I think instead of just demonizing China's technology, or instead of just saying that the Biden administration is blindly jealous of China's rise, we have to talk about some very serious technical detailed discussions whereby the two sides can have and should have a give and take. So in that sense, I think we need a second Alaska summit whereby we have technical groups involved and really go to the details of this, because data and cutting edge science is really complicated and cannot be simplified by just slogans and geopolitical posturing, which we have seen a lot of that in the past 4 years. We now need really smart statesmanship and really technical discussions here.
Let me add 2 points on top of that. I agree that we are entering into a Cold War 2.0. I've been talking about it since last year. So the Cold War, don't forget, in the first Cold War, man landed on the moon. That was because of competition. Competition is a great thing. And I think we need to use it wisely to build the technologies for the 21st century. And the last Cold War was not only peaceful, it was an amazing technological innovation period. And we should get into that mentality today. And the other thing is, I want to say that if you were sitting in the White House and China is creeping up to a near-peer competitor status, what the Biden is, particularly President Biden, what he faces is that in the next 4 years, and if he gets reelected during his second term, China, if he doesn't do anything about it, China is going to overtake the United States as the largest economy in the world. Would any US president ever accept that during his term or her term that US becomes the second largest economy? That's just simply not going to happen. I mean, for anyone who sits in the White House, there would be only one way to think about China as an existential competitor or challenger. I mean, there is no other way to think about China. So we have to understand where the United States is coming from. And Biden is no different from Trump. And Biden is not going to be, remembered on the columns of history as the one who took the United States to the second place in the world. He's not going to do that.
Thank you so much, Richard and Dr. Shirley. You have indirectly also answered another question from from the floor, which is on the current trajectory of US and China strategic competition and its sustainability. So let's move on to another question. Again, this is on blockchain technology. Where do you see blockchain technology in the future for Asian economy?
the world is fundamentally moving to digital space. And so in the fintech infrastructure is rather interesting. China's Alibaba and Ant Group, the fintech arm, has been building partnerships all across ASEAN region, from Thailand to Malaysia to the Philippines, and it's doing very, very successfully. So essentially that is based on a blockchain based distributed ledger technology. And so essentially for the Asian economies, we exhibit similar characteristics. One, large populace, a young population. And secondly, the 20th century commercial banking presence was not there. There was not a very solid presence of the commercial banking business model. And so in China was the same thing. Many Chinese moved to the fintech era before they even had a credit card. And all across ASEAN, that's the same thing. So fintech is going to develop, but what's eventually going to happen is this interconnectivity across different platforms that each country develops, and they have to have the fundamental basis in order for all these digital payment platforms to talk to each other. And so that Chinese tourists, when they go to Thailand, they could pay on Alipay, and they could clear in local currency. And so all of these digital transactions must happen in an efficient way, and distributed ledger technology such as blockchain has proven to be very secure and efficient. And so it's going to be adopted, but blockchain is not the only technology that can do this. There are other vehicles as well.
Okay, thank you. Richard?
Yeah, very quickly. I mean, again, Shirley covered everything that is necessary there. What I want to say here is this. I mean, from my own personal experience, I mean, the fact of the matter is that China is giving also us a preview of what can happen in much of Asia, right? Unlike wealthier countries, our populations are not wed to their old style credit cards and combustion engine and the kind of lifestyle that the Americans are so, essentially stuck with, right? And that explains why, for instance, China has been at the cutting edge of, completely using digital technology for almost all transactions, but also the fact that China now is the leading country when it comes to, production and consumption of electric vehicles. The fact that we have fresh lifestyle habits and kind of where new reach, I think a lot of us in the region makes us very receptive to new technologies, much better than our Western counterparts. And I think that will really make not only China, but the broader region increasingly under China's economic influence, essentially the new laboratory for the next generation of technology, whether it's blockchain, whether it's electric vehicles, whether it's 5G, 6G networks. So in many ways, we can leapfrog not only lifestyles, but also the technological innovations that the West is still trying to cope with. We're not invested in the 20th century technology. We're much more receptive to 21st century technology. And I think China is very much not only the leader, but it will be an engine for the dispersion of that kind of lifestyles and technology in the ASEAN region. I mean, it's just amazing how in the past 5 years alone, how much the ASEAN market conditions and economic sectors have completely transformed. Imagine what will happen in the next 5 to 10 years.
Thank you. That's the perfect segue to our last question. So in the tech industry, what is the outlook for tech consumers in ASEAN as a whole? Given that there's a split between the tech industry of the Eastern tech led by China and the Western tech led by US. Richard or Dr. Shirley, would you like to answer that?
Okay, I'll go first. Give it a try. So in the context of the series of sanctions that were given by the Trump administration to Chinese big techs, what was interesting was the observation that from Alibaba to Tencent to China's ByteDance, the parent company of TikTok, they have all inevitably moved their headquarters to Singapore, Asian headquarters. ByteDance and Tencent, they were hiring hundreds and hundreds of fintech people on LinkedIn. You could just see their job postings there. And so Singapore has been seen as this Asian headquarters that are going to radiate the technological expansion all across the broader ASEAN region. And so I think the series of sanctions from last year has really given Chinese private players, these tech companies, a wake-up call that perhaps the direction of globalization should be reoriented. So previously, they loved to go to the mature markets. They want to go to the United States, Australia, the EU markets, and now they are primarily looking at the broader BRI developing world. And so Chinese fintech are going big time into ASEAN and to a smaller extent in Africa, especially talking about Huawei has a major presence in Africa. And fintech platform led by Tencent and Alibaba, they are building partnerships all across Africa, in Kenya, in South Africa, etc. And so as a result, Africa's e-commerce and digital payments are booming. They're rising very, very quickly. And so perhaps the next generation of Chinese big tech's globalization strategy will be primarily focusing on the large developing world.
Yeah, I'll just try to be very quick on this because it's really, I love the questions because it really makes us think. And I'm really glad that Shirley is also on this panel to give the China and economic point of view. I mean, let me say, first of all, I don't have really, how should I put it? I mean, first of all, we do have a big tech problem, right? We have monopolistic exercises in the big tech sector, whether it's the Silicon Valley and its derivatives, or whether it's in China. And what's interesting over the past year or so is that we see crackdown both by the Chinese government. We saw that in the case of Alibaba with the launching of the Ant, for instance, and also we also saw that in the United States when they're trying to push for a certain degree of regulation of the Silicon Valley and all. Because our problem today is that we were promised that in a network communication world, we're going to see more democratization and more pluralization of economic prosperity. But we're seeing exactly the opposite of that the network companies are now the new towers and hierarchies. So something really has to be done with that, just from a monopolistic economic competition standpoint, not to mention privacy, among others, right? So what's interesting is that there's a convergence almost between the Chinese government and the American government, that something has to be done with these big tech titans who are running wild and running their own show and want to run the world, right? Just as crazy as the Wall Street masters of the universe messed up with the world economy, perhaps the big titans can do that. So in some sense, that's some interesting commonality which is not being emphasized, that China and US, both of them realize they have to rein in the big tech to a certain degree to protect the interests of their people, their citizens and consumers. Now, the second issue here is this. I think it really doesn't help us to look at this as an East versus West kind of tech. I think it's really better to look at in terms of spectrum and hybridity. I think increasingly in ASEAN especially, we're going to move towards a scenario whereby we're going to have a hybrid combination of Chinese technology, Japanese and American, and also indigenous big tech technology. I mean, if you look at Gojek of Indonesia or Sea of Singapore and others, they're also doing really, really good. And sometimes actually the ASEAN-based tech companies have an edge over their Chinese or Western counterparts precisely because of their familiarity with the domestic market. So this is not only US and China, we in the ASEAN are also developing very formidable counterparts of our own, right? If you look at the recent IPOs that some of the ASEAN based companies are doing. And I think the last thing I want to emphasize here is that no one is talking about it now, but remember, we wanted to create an ASEAN economic community. And the whole idea was that to kind of have a customs union plus, that we bring down non-tariff barriers and make it easier for ASEAN countries to have a common economic and industrial predisposition towards the rest of the world, right? So I think we may move this is the interesting thing here, is that in the ASEAN, economic integration is not like in EU, because in EU, the economic integration was bureaucracy driven. It was Brussels driven, right? In ASEAN, it's really private sector driven. And I think in the post-pandemic era and in the digital economy era, the private sector, both foreign big tech companies and domestic ASEAN tech companies, will intensify and push ahead this ASEAN economic community that we have been trying so hard to negotiate over the past 2 decades or so. So I see us increasing towards an integrated market whereby digital and next generation economies will be very, very important. But let me again end on this point because again, my job here is to be a little bit drearier, right, than just being upbeat about the future of economics. What really worries me is that we are in an era of tech disruption. Now, maybe for Shirley, maybe for a lot of us, we are going to be benefiting from this tech disruption. We have sufficient amount of communicative skills and familiarity with the sectors to do it well. But if you look at the data by the International Labor Organization, more than 50% of low-end and manufacturing jobs could be lost in countries like Indonesia, like Philippines, like Cambodia, Thailand, among others. And that's going to create another source of problem because a lot of us could take advantage of blockchain and new technologies, but there'll also be a lot of losers of these new tech disruptions that we're going to experience. And something has to be also done with that. Otherwise, that could also create its own tensions and problems down the road. So just to give a kind of a realistic tone to the fact that with change comes both challenges and opportunities. And I think we have to keep both sides of the coin in mind if we want to navigate the future of Asia in the post-pandemic order.
Can I just add on that point? The question was about this competition between Chinese tech and the West tech. I think for ASEAN, when you talk about digital applications, I don't think it really matters. You can use Facebook and you can choose to use TikTok if you want. So the tech application mutual exclusion only applies to China and the United States today, because China hasn't really allowed American techs to come in for decades, and the US increasingly is not going to allow Chinese tech to come in. And so those are mutually exclusive markets. But for ASEAN, it doesn't really matter. I mean, you can choose to use any apps you like. However, I think what you're referring to and what the world really worries about is not so much the application, rather it's the telecom infrastructure on which all these applications flow. So the telecom infrastructure is a big deal. And so the big question is, who is going to build this highway, information highway for ASEAN? Is it going to be Huawei or is it going to be Ericsson? So that is the big question.
Okay, thank you so much. We have one last question. So this is for Dr. Shirley. Does China and US does the race for 5G technology investments, would it create more tension? And if so, will the tension impact the global economy more negatively? What is your take on that?
I want to make one clarification. Today, when we talk about 5G infrastructure players, there's Huawei and a smaller Chinese counterpart called ZTE, and then there's Ericsson, there's Nokia, and there's Samsung from South Korea. These 5 players. There is no US competitor in the global 5G infrastructure space. I keep asking my Harvard colleagues and these professors, I say, how did the US how did it lose out completely, so completely? There is no player. And so what is the option for the United States? The Trump administration talked about they were trying to invest in Ericsson, which was rejected by the Ericsson board. They don't really want the US government to be an investor. And so now the US is stuck there. Do you build a company within the United States that are equally good in building 5G infrastructure? And so there is no better options for the United States now other than relying on these Western allies, let's say Ericsson, Nokia, or Samsung, to be a reliable partner in order to compete with China. But no matter what, the US is not a winner in this game. China or US has already lost completely in this digital infrastructure space. And so the tension, will it negatively impact the economy? Huawei expands currently across 170 countries globally. We don't have time today, but if you look at Huawei's presence in the infrastructure space by continent, the largest and the most successful expansion is in Africa, in Asia, to a smaller extent in Europe, and then in Latin America. And so what's left out is Northern Europe, Western Europe, and North America, and plus you want to add, if you want to add Australia and New Zealand, the OECD countries essentially. These countries, Huawei is not going to be successful. Huawei probably has given up, in looking at them as major opportunities anyways, but think about it. These are the countries that are going to have a set of reliable network, and Huawei has already expanded rather rapidly all across the large developing world. Let's remember, the majority of the global nations are developing countries. What do they want? They want low cost, agile telecommunications networks that can help them build into the digital economy, and they need financing. So when Huawei comes in, oftentimes the Chinese multilateral banks, China development banks, they would be willing to provide the financing for the digital infrastructure expansion. So these are very appealing options to these large developing world. And how does Ericsson or the United States compete in these scenarios? And so then you are looking at this global bifurcation. It's not exactly equal split, I should say. And to me, I think the Chinese 5G and the telecom does have a successful case there.
Richard, do you want to add on anything before we wrap up the session?
No, thank you very much. I think I'm running out of ammunition. My sleeping time should come soon. No problem. Thank you very much.
Thank you so much to the speakers and the audience for their excellent questions, answered very expertly and very gracefully by our speakers just now. So I will not attempt to summarize this very rich session, but I will leave, like in summary, I would just leave a note of observation. So looking at the developmental plan of China in the next 40 years or so, it is very clear that it aspires to move into the next stage of production, which centers on high value added products and also services. It has successfully done so to a certain extent and is aggressively investing in local manufacturing sector to nurture the sector so that it can be stronger and more resilient in the future for the next coming external shocks. The next frontier we have heard will be in the AI, blockchain technologies, and the digital economy, and even in carbon trading. And again, China is leading in innovation and has a long game plan, which is very apparent. So China, again, will be an important player in the post-pandemic economic recovery, given that the tension and conflict with the US can be minimized in the medium to long term. And with this, I would like to thank you everyone for joining us on this webinar. I wish you all a wonderful day ahead and hope to see you again soon in the next upcoming event by the WIEF. Thank you and goodbye.
Thank you to all.
Thanks, Rita. Thanks, Shirley. Thanks, folks.
Unfortunately, that's all the time we have for today's session. We truly hope that you have gained valuable input and will be beneficial to your online business. Thank you everyone for being here today and making this session successful. Please spare some time to complete the survey form we've prepared for you at the end of the session. Please also follow us on Facebook, Instagram, LinkedIn, Twitter, and YouTube for regular news and happenings. Now, on behalf of WIEF Foundation, thank you for joining us today and have a great day ahead.